Hello guys, and welcome to my YouTube channel once again. So in today's video, I want to show you a reversal strategy that you can use to trade the market and make some good profit. All right. So all you need to do is to watch this video to the end and watch me closely as I explain this strategy and how you can use it. All right. This strategy I'm going to be showing you in this video works on any type of market, any type of market. As long as you're able to identify what I'm going to show you, then trust me, there's a very high chance of making some profit if you take trades according to the instructions I'll be sharing with you in this video. All right. And also, before I even proceed, the registration for the challenge program I mentioned in my previous video is still ongoing. All right. So do well to take action now. It's a kind of a 10-man gang stuff. I wouldn't want to take more than 10. So you take action as soon as you can. All right. So what I'm gonna be doing is I'll basically teach you guys my updated strategy that has helped me, maximize profit, and my students are seeing results. You can see like the one I shared in my last video. There are some that I've even sent, and I just feel so lazy to share them. But I think I will try and do so much later. Maybe while editing this video, I might share one. All right, the one that shared a withdrawal. Okay, so those are the things I want to share um, in the challenge program. So all you need to do is to go there. Mind you, once I will use about a week to teach you everything, to brush you up with what you need to know. Then after that, we'll then the remaining 2 weeks we're going to be using it to take trades. I'll be giving you high probability setups, high probability trade setups that will help you maximize your profit, and you'll be taking trades according to what I have taught you guys. All right, so more information about this is in the my Telegram channel. Just click the description of this video. You find the link. Go to the description, find the link that will take you to my Telegram channel. From there, you click on you'll find the link to the main group where this program is the information about the program is being shared. All right. So meanwhile, let's proceed with the business of today. Okay, so when you want to trade reversals, reversals, as a forex trader, one of the major things you need to know is you need to be able to identify is where the market would want to change direction. Because if you're able to determine where the market or predict where the market wants to change direction, then you are would I say like 50% ahead. You are 50% ahead because market is actually going to reverse here. Then the problem you will have is your entry. That is just another that is another problem. All right, so if you're able to even know the market is going to reverse here, then you will have a large account size. You can just enter trade from anywhere, then set your stop loss wherever you want to set to ensure the market doesn't get you. Then you wait for your market to give you some profit and you're out of the market. You understand? So the issue of looking for a good entry is because you want to manage your risk properly. All right. So, but for now, let's just learn how to actually look at where or we can expect and say, okay, market is actually going to reverse here, or market is not going to reverse here. Those are the things we're going to be looking at in this video. So to do that, we are going to be concentrating on two major stuff. One will be trend lines, and the other will be market movement. All right, we'll be using trend lines and market movement. Trend lines and market movement. Then we can also use key levels. Yeah, key levels are very, very important too to in determining when the market wants to change direction. All right, so let's start with the trend lines. All right, so for trend lines, you have to learn how to draw trend lines, join lows and highs, join lower lows, and also join higher highs, and watch out to see where the market gets to. All right, now, so for example, now, let's say let's see something, guys. Let me show you guys something. Now, for example, there is a low here at this point. Then market formed another low at this point. Then you can see the market continued buying. Now, drawing of trend lines is just like drawing of how do we call it? Um, Marking out of resistance and support zones. Trend lines, there are times you draw them and they do not just touch just the wicks. There are times they need to be zones. That's why some persons will draw trend lines. We're using a kind of a double lines to mark out stuff like this. Because what do you have? You can see that the market is actually formed a zone while creating this trend. You can see market actually formed the zone while creating this trend. So if you can, if you link the first low, link the second low, then if the market comes here the third time, now let me remove this one first. The market came here on the third touch. You can see there is a reaction. You wait to see what kind of reaction the market is doing here to tell you, okay, the market is also going to buy, because you know after the first touch here, this is the second touch, the market came back here, they reacted, then bought, then come here, you should expect the market to buy, right? Then what will you see that makes you know the market is actually going to buy? You go to a lower time frame, look at the price action there, look at structures there that confirms the market is going to buy. Or if you are an aggressive trader, you can just, on market hitting this level, you can enter a trader with your stop loss just down here, and the market, you see, finally it bought. All right, but it's very risky because most times you can see the market, like after it bought from here with these two bullish candlesticks, it didn't go up again, it rather sold. It broke through this trend line and sold massively to the downside, so you'll be in a loss if you cannot go to the lower time frame to check out for the price action that indicates the market is actually going to buy, the market is not ready to sell. All right, and also you can see the market, after buying, after selling up to this level, you see it bought again, it bought and got back to this same level here. And you see the reactions, these reactions is what you'll be looking at for on a lower time frame to know if the market is actually ready to buy or sell. All right, so you just mark out these trend lines on higher time frames, then also go down to lower time frame. As market gets to the lower time frame, you look out for the price action around there. You can also mark these trend lines on lower time frames too, you know. Then in that case, when once market gets there, you look out for a candlestick pattern or a chart pattern that indicates the market is actually going to reverse, then you enter a trade at that point. All right, so for example, now let's say we have this one right here. Let me just put this trend line here. We have a high here. You see market has been selling, right? Market started selling, then we have okay, we have a high here, we have a low, this a lower high. Now market created a lower low here, so what do we expect? We expect the market to buy. On getting to a certain level, it should reverse to create a lower low, is it not? Then in that same within that same movement, we should expect the market to get to anywhere that will be in line with this trend line. Market has to get to this trend line to reverse again. So anytime the market gets back to this trend line at this anywhere around here, we are expecting the market to do what? To reverse, just like that. Then since this is a daily time frame, you go down to a lower time frame and find your entry, then you know the market to be selling. Since this was a lower high, this was a lower low at this point, then the next, after creating the lower high, the lower low will come up to the down to this level. What I mean is the lower low, the next lower low the market is going to create will be below this particular low here. So if you can get an entry wherever the market will touch this trend line, then you know the market will sell nicely, most likely sell below this low, or you can just take your profit here. That is on a higher time frame basis. You can also find this on a lower time frame. These opportunities can also be found on the lower time frame. Okay, let's just check the maybe the 1 hourly time frame to see if we can get some things there. All right, okay, look at one here. Sorry. Okay, now look at this. Look at this one here. The market sold. I was supposed to use this one to explain market movement. I was supposed to use this one to explain market movement. All right, you can see the market bought up to this level, then it sold, came back here, then sold. On getting back here, it couldn't continue going, then it broke and continued buying. All right, so this trend line is still valid. Market can still reverse and hit this trend line to continue buying. There's a very high chance the market can do that. All right, because since after this breakout, there's been no retest, there's been no proper retest, so the market can still come back to retest on this trend line if possible. You understand? So all you need to do is to always draw your trend lines and wait. Like this particular pair, there's this pair I like using when I want to illustrate these things. I think which pair is that? Let me see. Is it crash 500? Okay. All right, so look at this one now. Let me go to a higher time frame, like the 4 hourly time frame. Okay, let me see on the 4 hourly time frame. All right. So I'm not sure this is the pair I wanted to share. Okay, anyway, so we have a trend line here already. We have a trend line here, and the market hit the trend line the second time. The market the market is still selling. All right. So anytime the market gets to this trend line again, we will expect some sales. So once it gets here, what do? You find your entry and you take some sales. The same thing is applicable to this other trend line here. Just look at what the market is doing. It's what the market has done so far. It bought from here, bought again from here, then came back to this trend line again. It bought again. So these are key reversal points in the market. Once the market gets to a trend line, as long as you drew the trend line correctly, expect the market to actually change direction. All right. So you can also do this on lower time frames. You can do this on lower time frames. Just wait for the market to get there. I think I have this another pay here. Okay, yeah, V25 index. If you go to the daily time frame, you will see something I shared with you guys here once. Let me zoom out. Let me zoom out a bit. Let me zoom out. Okay. Okay, so look at something here. Look at this. Look at this. Look at this. All right. So you can see this. The market has been respecting these highs. So you can see the first time the market, this is the first high, the second high, the third high. Look at the market. Each time market gets to this trend line, there's always a reaction. And on breaking above this trend line, what happened? It broke above it, but then came back to do a retest. Then it continued like that. Then we still have another structure formed by this same market now. Look at another structure here. And if you can join a trend line, you can see the market has been buying from a trend line too. Just try to join this trend line correctly. Something like this. I would want to join from here. This is where I see the movement better. All right. Then I can duplicate this other one to place it right here. Okay. So now that's another zone. The trend line the market has been respecting. Each time it gets to this trend line, it buys. Market reverses. So you can just use this to trade them reversals. Like reversals may not just be the market changing its direction completely. It might just be moving within a particular channel. It reverses its direction as it goes up, reverses to the downside, then reverses to the upside, stuff like that. All you want to see is the market getting to the trend line. Once it hits the trend line, you look out for the price action there on lower time frame that confirms the market is actually going to change direction, whether for a short period of time or not. Then once you're able to do that, you can apply it for a higher time frame trade and to take some long trades and make some good more bigger profit. All right. So the next the next way to identify a market that is about to change direction is through impulsive correction. Yeah, impulsive correction. For example, now this is an impulsive correction here. You can see this is an impulsive correction. How do we determine impulsive correction in the market? Look at the movement of the market. It moved nicely. It has been buying impulsively. Then it started creating higher highs and higher lows. Once you notice this kind of a thing, you notice that the market at this point is about to change direction. The market will change direction once it gets to a strong resistance zone. The market will likely change direction once it gets to a strong resistance zone. Like what is happening right here. You can see the massive sales down to this level. Though I have not checked on the daily time frame to confirm or the weekly time frame to confirm if the market has hit a very strong resistance zone. But once, trust me, the market will be selling. Once it finally breaks out of this trend, and goes below this zone here, the market will be selling so nicely. The market will be selling nicely, maybe to back to this zone here. All right. So once you notice this impulsive correction, know that the market is going to sell. All right. The same thing is applicable to this crash 900 index I was sharing with you guys. You can see that the market created impulsive correction at this point. It was selling nicely. It was selling so nicely from here. It has been selling and selling and selling. Then it started creating lower highs and lower lows. Then all you need to do is to join the trend line and wait for the market to break out. After the breakout, what happens? A massive buys. So this is an impulsive correction too. If you are able to determine when the market is creating an impulsive correction, just be patient and wait for it to complete the impulsive correction. Then breakout, you can follow them, find your entry to trade. These are the things I take time to teach my students. So if you can practice this on your own, then trust me guys, you will be able to determine the market direction and also know when to look for buys and sells. All right, so that's how it is. It's very simple. It's very simple. The next thing is key levels. You need to learn how to mark out key levels in the market. You just need to learn how to mark out key levels. For example, here, this is the 4-hourly time frame, and I see something that looks like a key level here. What are key levels? Key levels are those zones that market have been reacting to in both directions. Like market has been buying and selling from the same place. For example, there's a key level here where I just placed this horizontal line. You can see market sold from this line and also sold here again. There's another sell activity at this point, and the market bought here twice, then finally broke below it, and then sold massively. All right, so now how do you determine if the market is actually going to buy? If you find this on a higher time frame, if you mark out these key levels on a higher time frame, then you wait for the market to give you some reactions on a lower time frame, or if the market breaks below it, then is buying towards it. Like what happened here. Look at the kind of structure the market is buying, is creating as it approaches it. For example, like this one here, we can see there's a correction here. The market started creating higher highs and higher lows. Then this tends to tell you that once the market gets to this zone, it is going to reverse. Once the market gets to this zone, it is going to reverse because the market was selling nicely, then it started buying, so it's going to reverse from this zone to continue selling to the downside. So if you can mark out your key levels correctly, it will really help you to determine market reversals and also maybe continuations too. All right, so this video is already too long, guys. I wanted to make a very short video about this reversals, but I think I've not exhausted everything I wanted to do. So I will continue in my next video. I will explain more on this. Then there is one particular indicator, technical indicator, I will be showing you guys how you can combine it with price action. You combine this indicator with price action to determine market reversals. It's very powerful, guys. All right. So if you'll be interested in watching that, I want to see. Just type in the comment section. Just type in the comment section. Price action and technical indicator for reversal. Just type something like that. I want to see that. I want to confirm that you've actually watched this video up to this time, up to this minute. So I'll do that video and you'll be happy when you see it, guys. It is powerful. It's massive. All right, so click the subscribe button if you've not joined this channel yet. Then like this video, share it in the comment section. I'll see you guys in my next video. Stay blessed and peace out.